Hi everyone, welcome to Vauld's official YouTube channel. So on today's video, we are going to discuss how you can create a crypto portfolio, what is the landscape of options available for you, what is the risk profile with each of these options. We are going to have that complete discussion. Three specific things that I'm going to speak about. First, I will speak about the crypto investment options. What are some of the broad options that you have? Second, I'm going to talk about some of the key points that you must remember in terms of making these investments. And third and finally, we will try to create like a sample portfolio for beginner, intermediate and advanced users. So let us get that discussion started. And first and foremost, let us understand what are the options available for investors to invest in cryptocurrencies. While there is no standard bifurcation at play, but understanding the following 5 options can help you understand the landscape of available options in a more holistic manner. So let us understand each of these 5 options one by one. So the first available option for investors are the layer 1 protocols. An example here would be Bitcoin, Ethereum, Litecoin, Solana. So these are layer 1 protocols. Now, why are they called layer 1 protocols? Because these act as the basic building blocks on which other cryptocurrencies and other crypto projects are built. For example, if you consider Ethereum, then Ethereum is the main blockchain network. It is very similar to the internet, what we are witnessing in Web 2.0 space. So internet is the basic building block on which other applications like PayPal, Google, YouTube, etc. are built. So the basic building block in Web 2.0 is the internet on which other applications are built. When we switch to Web 3.0, we have protocols like Ethereum, which act as the basic building block on which other things are built further. A classic case in point would be Uniswap or MetaMask that allow you to transfer and swap cryptocurrencies. These protocols are built on layer 1 solution, which is called as Ethereum. So that is your number one investment option, that you can go and invest in layer 1 blockchain solutions itself. Some primary options being Bitcoin, Ethereum, Solana. So these are some of the most important protocols as of now. Now within layer 1 protocol also, there are a range of differences. For example, if you study the tokenomics or the utility of Bitcoin and compare it with Ethereum, there is a huge difference between the two. It is often said that Bitcoin is like digital gold. It has finite amount of supply. The supply is deflationary in nature. Deflationary in nature simply means that, hey, there cannot be infinite amount of Bitcoins that can be released onto the Bitcoin blockchain network. It is limited and the amount of supply of Bitcoin goes down with time. There are only 21 million Bitcoins that can be released onto the Bitcoin network eventually. On the flip side, Ethereum is inflationary in nature. The reason why people buy Ethereum or invest in Ethereum is because of the application side of Ethereum. That because of the fact that a lot of useful applications can be built on Ethereum, therefore people buy Ethereum due to the developer ecosystem that exists. So just to help you condense the point when it comes to layer 1 protocol, majority of the people right now, they are investing in Bitcoin. Why? Because Bitcoin is deflationary in nature. It is acting as a hedge to fiat currencies like US dollar, INR, Singapore dollars, because governments have infinite amount of money that they can print, and that leads to inflation oriented problems. So people believe that since Bitcoin is a deflationary asset, very similar to gold or silver, if they buy Bitcoin, it can act as a hedge to this existing problem of monetary inflation, so to say. On the flip side, people are buying Ethereum simply because of the developer ecosystem that is shaping up and the range of applications that are being designed. Just to wrap up this thought around layer 1 protocol, people these days are getting very excited about the Solana blockchain because of the speed of transaction that happens on Solana, and it is powering up the gaming ecosystem. So a lot of gamers are preferring to invest in Solana oriented projects, and as a result, Solana also is gaining a lot of prominence. Then comes layer 2 protocols. So layer 2 protocols, in very easy to understand language, they help layer 1 protocols improve their functionality. Let us understand this point by using the example of Polygon Matic. Now, Polygon Matic is a side chain. It is a type of a layer 2 scaling solution that is helping Ethereum improve its performance. Now, Polygon is what? Polygon is a layer 2 solution. It is a side chain. Now, side chain is just a variant of a layer 2 solution. There can be nested blockchains and bunch of other systems and processes that these layer 2 solutions can encompass. But the important point for us to know as investor is that, hey, that layer 2 solutions are functionalities and add-ons that are getting built on layer 1 solution, and they are helping improve layer 1 solution in a certain aspect. Now comes the third option of investment, which are called as meme coins, and you would have often seen Elon Musk tweet about these coins. Two primary options that have been very popular here are, one is called as the Shiba coin or Shiba Inu coin, and the second is called as Dogecoin. Now, these are basically meme-oriented fun coin. They are narrative-driven and they are community-driven coin. For example, if you study the Shiba Inu coin, it might look really funky, it might look really crazy as an investment option. But if you read the white paper, you will see that, hey, probably this is just a fun coin. It is supporting dog-oriented communities in real life. People who believe in Shiba Inu, they call themselves a Shiba army. And whenever they are investing in these coins, some dogs in the real world, they actually end up getting helped through this project. Is it a sensible investment? Is it a serious investment? Does it have fundamental value? All those points you need to ponder further. But it's not as if that these things do not have any value at all. Yes, this style of investing might not align with traditional investors, but the scale and the way Shiba Inu and Dogecoin have grown in the past shows us that there is a subset of people in the world that believe in these type of meme coins as well. Understanding meme coins is also very important simply because of the fact that previously Shiba Inu and Dogecoin became really big. Now maybe after a couple of years, maybe some new trend will come. People will start supporting ducks or people will start supporting environment oriented coins. So you just need to keep an eye out of a particular meme coin that is gaining strength in the market and it might become a good investment option, so to say. Now comes the fourth option of investment. So these are called as new coins or new projects. In fact, there are so many new coins and new projects that are released on the decentralized world every single day that you might find it really hard to keep a track of it. So therefore, it becomes very important for you to follow the project, follow the Discord community, follow the Twitter groups, follow the Telegram groups of these new coins that you're excited about. But to come back to the topic, when it comes to new coins or projects, they usually end up getting listed as ICO, IEO, or IDO. So I will just take a minute to explain these different terminologies. So previously, back in somewhere around 2017, 2018, ICO was a booming craze. ICO simply means that these are initial coin offerings. It's very similar to IPOs. For example, in the stock market, if the company is trying to move from a private listed company to a public listed company, it launches an IPO on the stock market. You might have seen the founders ringing the New York Stock Exchange bell when their company gets listed. That is called as IPO of a stock. Something very similar happens into the cryptocurrency space and different coins can launch their own ICO. This is called as ICO or initial coin offering and the fundamentals remain approximately the same. Now in 2017-2018, given the fact that many cryptocurrencies act in a decentralized fashion, many of these ICOs were linked to their own websites. And as a result, there was a host of scams that used to take place. So we moved from a world of ICO into IEOs. So IEO simply means initial exchange offering. Now there are several exchanges that first and foremost filter the list of coins that can be listed on their exchange. So this limits the bad coins that can be listed on the market. Then finally, we have something called as IDO, or these are called as initial DEX offering, and these are done through launchpads. For example, there are launchpads like Polka Starter, Binance, and you can go and buy these coins early on when they get listed on these launchpads. Now, one final point that I would like to tell about ICOs/IDOs is that they can be very fruitful in terms of making returns, but can also be very risky. So let us understand that point by talking about a coin called as Super Rare. Now, you can clearly see that it ICO'd somewhere in August of 2021, and within a few days, it almost 3x'd in price. So that is the return potential, and this is a trend that you will see with several ICOs/IDOs. And that is the reason why people get so excited in terms of applying for these. It is okay, but this is a highly speculative type of investment. So please keep that in mind. Now, the fifth option for an investor is to invest in NFTs or metaverses. So I have made separate videos on this topic, so you can go check it out, understand more what NFTs are, what metaverses are. And these are some of the most explosive investment options as of now, which are gaining a lot of prominence. They are risky, and since by definition, NFTs can't be broken apart, at least the top tier NFTs cost a lot of money. For example, you can buy a fractional amount of Bitcoin or Ethereum, but you can't buy one of the most famous NFTs, which is Bored Ape Yacht Club, as a fraction. So that is a problem in terms of NFT buying. A potential solution is that, for example, if you believe in some metaverses, for example, you want to invest in a project called as Axie Infinity or Decentraland, there you can buy fractional amounts and you get an indirect ownership in that particular ecosystem of which NFTs are a major part of. So I hope this gives you clarity on the 5 investment options that you have in cryptos. This is not the entire ecosystem, but this pretty much sums up the broad ecosystem available to crypto investors. With that said, let us move on to section number 2, where I will speak about some major criteria or points that you must understand in terms of building your crypto portfolio. So there are 5 specific points that you must remember in terms of crafting your crypto portfolio. So first and foremost, cryptocurrencies inherently have a lot of volatility. Why is that? Because cryptocurrencies, relatively speaking, compared to other asset classes, they are not old. They are fairly young. They have only existed for the last 1.5 decades. So the volatility of any new asset class is going to be high. So if you zoom down and try to explore different cryptocurrencies, they can be more volatile than the others. For this, you need to keep a concept in mind, which is called as that to what extent a cryptocurrency has been time tested. Pick Bitcoin, for example. It is a fairly old cryptocurrency compared to something which has been recently launched. So if you want to be a slightly more risk averse investor investing in crypto, then your risk goes down if a cryptocurrency has been time tested. Then comes point number 3, that some cryptos are purely narrative driven. We took a look at meme coins. Now many a times when the narrative is positive, these coins go up in prices. They end up giving massive returns to the investors. But if the narrative dries up, then these coins fall a lot in price. So please remember that point as well, that in narrative driven things, you need to ride the wave. Fourth point is that you must understand the utility of a cryptocurrency. For example, if you are deciding to purchase Bitcoin, then the utility of Bitcoin is that it is deflationary in nature. That is one of the primary utilities of Bitcoin, and it is akin to digital gold. So please figure out the utility of any coin or project that you are considering to invest. Then comes the fifth and final point, that tracking the community or development ecosystem is a great way of tracking the progress of a coin. Now, on the next class, I'm going to help you understand how to research cryptocurrencies. But you must understand that how the user ecosystem is shaping up, that are more and more people using that cryptocurrency, and also are developers coming onto the blockchain and are developing different protocols and aspects related to that cryptocurrency. So if you keep these 5 points in mind, it will help you bifurcate good cryptocurrencies from the bad ones. Now let's talk about the final step, that if you are really interested and keen in terms of crypto investing, then how should you get started? If you are an intermediate user, then what are the aspects that you need to take a look at? So let's start having that discussion. If you are an absolute beginner, then probably it might make a lot more sense to buy time-tested cryptocurrencies, buy in small amounts, and then amp up your positions. So if you are a complete beginner, please start with layer 1 protocols and then expand from there on. If you are an intermediate level investor, then please understand more about the utility of any coin that you're purchasing. If you can identify some major trends or some up moves in the crypto market by looking at technical indicators, technical parameters, then you can play around with these options in terms of investment. If you are a highly advanced crypto investor, then exploring options like IDOs might make a lot more sense. But irrespective, please understand that you need to understand the fundamental utility of any cryptocurrency that you are purchasing. And if you understand that, you will have a lot of faith in terms of holding that cryptocurrency, even if the markets are not performing as per expectations. So I hope you enjoyed the video. Please like and subscribe, and I will see you the next time.